Hello, and welcome to the August 2023 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. July was another good month for stocks. The U.S. indices were up in the low single digits, with the Nasdaq doing the best as tech stocks continued to rally. International markets also did well in June, with developed markets up about the same as the U.S., but with emerging markets jumping sharply. Fixed income, on the other hand, was weaker, with U.S. aggregate bond index down slightly. Financial markets continued in a risk-on mode, benefiting riskier investments like tech stocks and emerging markets at the expense of more boring ones. The market performance reflected the underlying economy. The second quarter's economic growth came in stronger than expected during the month and was even faster than the already strong first quarter. Strong job creation pushed consumer confidence up significantly last month, supporting income and spending growth, and that in turn has been good for corporate earnings based on the reports so far. Despite that growth, though, inflation continued to decline last month. Headline inflation dropped to 3% for the past year, the lowest level in some time, while producer prices dropped to 0.1%, close to zero. This is real progress. But while things do look better on the inflation front, the Fed did raise rates again as expected last month, noting that inflation is still too high. While the Fed remains committed to lower inflation, though, there is real evidence their policy is working, which should mean rates could stabilize at or close to current levels. So on the whole, last month's news was good. The economy continued to grow as more people got jobs and worked and spent. While inflation is still too high, it's moving in the right direction. And while the Fed is alert for inflation, they're very likely nearing the end of the rate increases. But even as the outlook remains positive, there are, of course, still risks. The biggest domestic risk is that inflation spikes again, which could drive interest rates higher and force the Fed to keep hiking. Beyond the U.S., of course, we still have a war in Europe, as well as the China wildcard. And that's not even considering the risks we don't see yet. Nothing is guaranteed. But despite those risks, as we look ahead, the fundamentals are still healthy. The economy may be slowing, but it's still growing. The biggest problem out there, inflation, continues to get better. And that's a good place to be as we get close to the end of the summer. That's it for this update. Thanks for watching. Join me in September for the next one, but until then, be sure to check my blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. And I hope you're having a terrific summer.